What's up, guys? Today I'm gonna do a different type of video. Today's gonna be a psychology video. I think I want to do these maybe like once a week, once every 2 weeks kind of thing. It's not gonna be a trade recap today. I think a big issue with a lot of traders is they're stuck in a loop and cycle of understanding whether they're unprofitable because of psychology or if it's because of the strategy. And I'm telling you guys, some of you guys, I think a small percent, but some of you guys already understand how to read the market. This doesn't mean you have a 100% win rate or 50% or 80% win rate. You don't need a high win rate to get profit and payouts. All right. Like as you see on the screen, I'm popping up some screenshots from the free Discord server. You guys can join the link down below. But essentially, these are a lot of my student payouts, okay, from my mentorship program. These guys used to be in the course, they joined the mentorship, and their life has completely changed around. You can see, I mean, everyone has different win rates. Okay, not everyone's gonna maintain the same win rate. You can see Tyler here has a 72% win rate. Domain here has a 63% win rate here. This is on a different account. 67. I hate saying that word, but yeah, 67% win rate. Here is another student with a 20 RR month going full time. Another student getting his first payout with my strategy here on Lucid. Student with a 24.5, like about 20K payout here, in just like 3 weeks, not even into the mentorship program. Like I'm telling you guys, you don't need a crazy high win rate. Okay, I'm telling you, yes, some of my students have a 70% win rate, some of them have 60% win rate, some of them have 50% win rates. They add different things to tweak towards how they'd like to trade, their trading style. Okay, with my strategy. So there's nothing wrong with making refinements or little tweaks to my trading strategy if you find them more suitable towards your psychology, right? Today's video is just talking about psychology, how I feel like, you don't have to be perfect in the market in your technicals. However, your psychology should be near perfect. If your psychology or your discipline is not good or near flawless, it's going to be a big issue when you're trading live because you think you're trading your strategy when in reality you're not. You have past tested positive results, you go live trade and it's not the same results. That is all psychology. I'm telling you, there's nothing else bridging the gap between your back testing and live trading. All it is up here. It's all up in your brain, but everyone keeps thinking it's not. Okay, I'm telling you guys, it is. That's all it is. That's the missing piece of the puzzle for many traders out there. It's their psychology. You have to lock in on your discipline. I do think, yes, sure, being disciplined off the charts is going to help with the discipline on the charts. But again, it's a whole different ball game, I feel like, in trading. Trading is unlike any other hobby that you're disciplined at. I'm sure some of y'all maybe are disciplined at your 9 to 5 job. Get nothing wrong with that for now. But if you want to escape that, of course, trading the markets, that gives you the freedom to do so with a proven profitable strategy like mine and a very good mindset. You can truly make this, a living. You can make a living off of this. I'm so serious. If I've done it, my students have done it, so can you. I'm no different than you. Everyone here that I teach is no different than each other, okay? Like, for example, Machi here. He has a much lower win rate than Tyler, okay? I just know from our mentorship calls, from our data collection, he does trade a different type of style. So he does trade my strategy, but incorporates some other things into it. And the biggest thing is he's looking for high time frame expansion moves, going for like 1 hour, 4 hour swing highs and lows. So his RR average is like 7 RR plus. His win rate is going to be lower. Of course, usually they are inversely correlated. The higher your RR, the lower your win rate. The lower your win rate, the higher the RR. Vice versa. So you guys get the point. I'm trying to say is, once you understand the strategy, once you figure out your backtesting, don't backtest anymore and lock in on your psychology in your live trading. At some point, you have to go live. You cannot just continuously backtest forever. I do think backtesting is a very, very good tool that everyone should do and start doing when you're new to trading. But after a few years in, if you're still backtesting and you're already profitable from your backtest data, there's no reason to continuously backtest for another year. It's not going to do much or help you at all. What's going to help you is building that discipline in real time and spotting setups in real time. That's going to help you much more. You will notice that the market does a lot of fake outs. If you guys are trading live, you will notice the market does a lot of fake outs. And these fake outs are tricking your brain in real time to thinking there's a setup when there's no setup. That's a problem I've noticed with, a lot of people that are struggling. Okay, your brain is being tricked subconsciously. You think, oh, I'm following the system. I'm following the backtest strategy. But you're actually not, because if you were, you would replicate similar data, similar win rate, similar RR, or similar net risk reward a month. All right, so there's a gap between your live trading and your backtesting, and you gotta figure out that gap and resolve that gap. Because I've had students in the mentorship, they show me their win rate from backtesting and their RR, and guess what? They trade for a few months, several months, and their live trading win rate and RR almost is identical 1-to-1 to their backtesting RR and win rate. So if they can do it, you can too. It's all about being disciplined and being completely flawless in your execution. Yes, not everyone is going to be perfect in your executions. I make mistakes from time to time, but you want to keep that tilt percent or the percent that you're making mistakes under 10% ideally. When you go over that 10%, that starts cutting into your expectancy, that starts cutting into your edge. And if you don't have a big edge in the first place in your backtesting, it's gonna hurt you a lot more than someone with a much bigger edge than you. Okay, you don't need a big edge to get profit and payouts. Yes, a lot of my students have a very nice edge, 50% at 3R, 60% at 3R, 72% at 2RR. But you don't need that. All you need, if you think about it, is a 60% win rate at 1-to-1. I'm so serious. For prop firms at least, this is all you need to get payouts consistently. 60% at 1-to-1. With proper risk management, where you're not changing your risk every single trade, 60% 1RR is a 0.20 EV edge. Now, I would say, like, obviously, you want to improve this up to give you some wiggle room in terms of emotional mistakes. But if you're someone that can truly think you have a locked in 10 out of 10 psychology, all you need is a tiny edge to milk prop firms. They don't charge you guys commissions, okay? I believe you pay like a clearing and I think it's called NFA clearing fee. But in terms of pure commissions, a big majority of firms, they don't charge anything for commissions. I know it's labeled under commissions, but it's not commissions, okay? I promise you, commissions hit or impact your P&L much more in a live personal account than you see, because you guys don't see it on prop firms. So just keep that in the back of your mind. Again, a small edge is all you need for prop firms. If you're trading a personal account, that's a different story, but I'm almost certain 99% of you guys watching here are not on a personal account because you're trying to take advantage of the massive ROI that prop firms give you. And I don't blame you. I do think prop firms are a great way to build a lot of capital quick. Not trying to say this is get rich quick, but you can get pretty rich. I don't like to use the word wealthy. I was gonna say wealthy, but that's like a whole different league. Rich is like here, wealthy is like up here. Okay. Wealthy is to the point where like you don't need to be actively trading anymore. That's how I define wealth. I think wealth is where you have so much money and capital, you can put it into other investments, investment vehicles that essentially make you a lot of money passively without doing a single thing. You're just letting your money do it, make more money basically, is when wealth comes into play. But when it comes to being rich, you're still working actively towards making that money, like trading. So until you get to that wealth level, you're gonna be day trading, you're gonna be making money from these prop firms. Fund that into a personal account at some point, and I promise you, you will notice the commissions when you move to a personal account from a prop firm. Like you will notice, like if I check my report from Tradeovate on my dashboard, I can see I'm paying a good amount of commissions. Okay, that's cutting into my like winners, even my losers too. So, because you're paying commissions regardless, right? So definitely want to keep that in the back of your mind. 60% win rate, 1-1, all you really need for prop firms. Don't overcomplicate this. Don't try to go for a super optimized 90% win rate system. You don't need that. That's some complete BS. Like I said, Machi here has a much lower win rate than majority of these other students, but because of his high RR and he's very disciplined. Okay, I track all my students' journals. I track all y'all's journals, your live trading journal, your backtesting journal. But once you're done with the mentorship, I'm mostly tracking your live trading journal, and I'm telling you, Machi here is probably one of the most disciplined traders I've seen in terms of the journal, okay? In terms of like trades he's taking. Yes, my students here are all disciplined. They're all disciplined, otherwise they wouldn't be profitable. You can have the most profitable strategy and system, but if you're not disciplined, it means zero because you're not trading strategy anymore, or you're forcing bad trades that you know from your backtesting, they don't work. So if you're forcing trades that don't work, what can you expect out of your P&L? Zero, negative. So just keep that in the back of your mind. If you have very good discipline and you can execute almost flawlessly, any type of edge will work in prop firms. and you will start seeing the fruits of your labor print, start getting these payouts. Because I mean, you can see on my students, they're cooking. I can show you guys another screenshot here real quick from the Discord as well of one of my students. He's had like 0 red days, which is pretty nuts so far in 2026. All right, so here's a screenshot from my free Discord server in the privates tab. As you can see, one of my mentorship students that I've worked with one-on-one, like I think he's had 5 top step accounts, I believe. But essentially, yeah, he's copy trading them, and he's had not a single red month, or sorry, not red month, not a single red day this entire year. It's been almost 2 months into 2026. So if you can do it, he was unprofitable. He was very unprofitable before, honestly. If you could do it, you guys can too. That's all I'm gonna leave you guys with today's video. If you guys like more of these psychology lectures, just want like more trading talk, I guess, sit down kind of things, not just technicals, comment down below, let me know, and I'll try to do these, like I said, once a week along with the trade recaps that will be pushed a bit more often. So yeah, hope to see you guys in the next video. Peace.